Hi, this is Lara from Elliott Wave Forex with your free US dollar index Elliott Wave analysis on the New York trading session dated Monday the 13th of December. Before I jump in, here's a big picture look on a weekly chart for the US dollar going back to early 2007. I have this all within a cycle degree C wave to the upside. We have a primary 1, an expanded flat A, B, C correction for primary 2, and now the dollar is within a primary third wave to the upside. We've had intermediate wave 1 to the upside, a strong zigzag structure down for intermediate wave 2, and according to this wave count, the dollar is within intermediate wave 3 within primary 3 to the upside. Within this primary 2, we have a textbook perfect expanded flat here. This B wave at intermediate degrees, a 111% correction of this A wave, and the C wave, an obvious 5-wave structure, is just 1.94 short of 1.618, the length of wave A, very common relationship between A and C for an expanded flat correction. Before I go into this main wave count in greater detail, looking at this beginning of intermediate wave 3 to the upside, here are my two alternate wave counts. It is also possible, and this is on the same weekly chart, that the dollar could possibly be within a contracting triangle structure, probably for a B or a fourth wave. My biggest problem with that, however, first of all, this upward structure could certainly be seen as a 3-wave structure for an A wave, that's fine. However, this downward structure is pretty clearly a 1, 2, 3, 4, 5-wave structure. It's impulsive, and this upward structure for wave C of the triangle is also impulsive. 4 out of 5 of the subwaves of the triangle must be zigzags or zigzag combinations, or possibly a triangle. And in this case, we have 2 out of the 5 subwaves of the triangle having an impulsive count. So for that reason, I do not favour this wave count. That's why it's a slim outlying possibility. We would have to see at least one of these 2 waves on the weekly chart as corrective, and I think that's really is stretching it. This triangle is invalidated with movement above 88.71 because E cannot move beyond the C, and any further extension to the downside of D cannot move beyond the end of B, so in the short mid-term, it's also invalidated with movement below 74.17. My other possible alternate sees the dollar as within a primary degree 5th wave. We certainly can again see this upwards movement as a 3-wave structure for a primary 4th wave, and so far we have an impulse down. My problem with this wave count comes here. With this wave count must see this upwards movement as a corrective count, and to me it has a pretty strong count of a 1, 2, 3, 4, 5, 6, 7, there's a little triangle here, 8, 9. 9 is an impulsive count. It's very difficult to see this upwards wave as corrective. Therefore, for that reason, I expect this wave count is pretty unlikely. It would be invalidated with movement above this point, as any correction within intermediate wave 3 to the downside cannot move beyond the start of its first within it. It would be confirmed if price moves below 74.17, at which point my main wave count would be invalidated. This is my main wave count. Expects the dollar is within a 1, 2, 3rd wave at primary degree to the upside. Within primary 3, we've had 1, 2, and we're in the start of intermediate wave 3. So here it is on a daily chart. This is the end of that black 1, and here's our strong ABC zigzag down for intermediate or black wave 2. Nicely contained in its trend channel, drawn using Elliott's technique for a correction, with a very clear, obvious breach to the upside of this channel, indicating in the midterm our trend has changed from down to up for the dollar. Within black wave 2, we probably still don't have an end to blue or minor wave 1. We have an end to minute 1 or pink 1, minute 2 to the downside. Within pink or minute wave 3, we have a 1, 2, working on a 3rd wave within a 3rd wave within the 1st wave at minor degree of this 3rd wave at intermediate degree to the upside. Even any further extension to the downside of green wave 2 may not move beyond the start of green wave 1, so this wave count in the short term is invalidated with movement below 77.98. It's confirmed with movement above 88.71 above this point, because black wave 3 must move beyond the end of black wave 1. So movement above that point would confirm this wave count and invalidate both of the alternates that I just presented earlier. My mid to long term target for the end to black wave 3 is 99.16, where it reaches 1.618, the length of black wave 1. Taking you now to the hourly chart, where this green 2 down here is this green 2 down here. Here was the end of our zigzag to the downside for green wave 2. And now within green wave 3, I expect for the first wave within it, we have the end of a contracting leading diagonal with a 1, 2, 3, 4, 5. 3 is the longest, so it doesn't perfectly meet the rules for a diagonal regarding wave length. However, that's all right because that's often the case with diagonals. As I keep saying, I expect that rule regarding wave lengths for diagonals should probably be rewritten, and we often see third waves within contracting diagonals which are the longest. However, wave 4 is shorter than wave 2, and both of them are zigzags, but all of waves 1, 3 and 5 certainly look pretty strongly impulsive. Thereafter we have a 3-wave zigzag to the downside. I don't expect that orange wave 2 was actually over here because the subsequent upwards wave is a pretty strong 3-wave look. We may see it develop into a leading expanding diagonal for wave 1 purple within wave 3. However, it's most likely, I expect at this stage, that we're going to see a double combination complete for wave 2 orange. This upwards wave here that I have labelled X purple is an 88% correction of wave W. If this wave 2 at orange degree was unfolding as a flat correction, this would be wave B within it, which should be at least 90% the length of A, and that's not the case here. So therefore, I expect this is not a flat correction unfolding for wave 2 orange. It's most likely a double combination, either a double zigzag or a zigzag followed by either a flash or a triangle. We'll see how this one unfolds. I expect we're most likely to see a zigzag to the downside for wave Y, possibly also a flat and less likely a triangle, around about to 79.724 where wave Y purple will reach equality with wave W. Thereafter, when the second wave correction has a satisfactorily complete structure, the dollar should turn and move strongly upwards within a third wave, within a third wave, within a third wave. We should see an increased momentum to upwards movement once that is underway. In the short term, any further movement below 79.063, because wave 2 orange may not move beyond the start of wave 1 orange, would invalidate this wave count at the hourly chart level. So a little bit more sideways movement, trending generally down for a few more hours to complete that corrective structure for wave 2 orange, and then the dollar should turn back up and move strongly upwards. That's all from me with your free dollar analysis. If you would like analysis from a pure Elliott wave perspective of the euro dollar and or the pound dollar on a daily basis, you will find it on my site. I hope this helps you in your trading.